The following is a presentation of TFNN. Live at TFNN, the Small Cap Roundup, with your host, Kate Stalter. Now, Kate Stalter.
Hello. Happy Thursday out there. I guess we could call this Fed Thursday. Some of you who are longtime listeners to the show, you know that my friend Hank Mulvihill runs his event called Fed Friday about 4 times a year down in Dallas. And he's been on here to speak about that. But yeah, I guess we have Fed Thursday. Usually these announcements come on a Wednesday. I'm not sure why it's different this time around, but it is, and I'm sure it's out there reported, and somebody could tell me instantly why that is, but I haven't really paid attention that much to why the change in day. I've been really just as most of us have, I think, following all the speculation about more QE. We'll know in about an hour and a half, probably, what's going to happen here. It does seem that the markets are expecting it, particularly after some of those unemployment numbers this morning. And in our world of bad news equals good news, that could well be what that means with this dual mandate. Now you could certainly make the argument that the first rounds of quantitative easing, those first couple of rounds, did not have the desired effect on unemployment. I don't think it would be difficult to make that argument at all. But nonetheless, who knows? Maybe it'll provide Ben and his pals over there on the FOMC a chance to use that as their reasoning for some more money printing. Okay. Now, the other thing, let me just start off. I've got the usual chart of the IWM that I've started off with there in front of you today just to take a look. Looks like we reversed off of some earlier highs there on the IWM. And it does also look like, just kind of checking what I'm seeing on some of the major indexes, still holding up pretty well. Really just kind of in a holding pattern right here ahead of the Fed. So we've got the IWM, which of course, the Russell 2000 ETF being the small cap show. I like to just kind of start out with this. We get an overall glimpse of where the small caps are trading on any given day. Up about 15 cents, so about a little bit shy of 0.2% to 84.64 on that particular ETF right now. So a little bit higher than my screen is indicating right there. Let me just update that. Okay, there we go. We got a little bit of a delay on this screen, but I'm looking at my live NASDAQ feed on another screen I've got here. Okay, so we've got pretty good action today so far on the indices. And, of course, we will have a much better indication of where all this is heading in about an hour and a half. Now, the other big story that I'm finding pretty interesting today, and it's obviously not a small cap. There we go. Apple, putting a chart of Apple for you there on screen. Saw a bit of a sell-off prior to yesterday's announcement, seeing a gap up today. You know, this is what's so fun about all these prognostications that you get out there with so many people. I was watching in the financial media all day yesterday with and the day before, so many people predicting a sell-off in Apple. I mean, really, there was a couple of the channels just had analysts all day long giving their predictions of what they thought was going to happen with Apple as a result of this recent announcement regarding the iPhone 5, the larger screen size on the tablet, some new connectors. What else we got here? Some updates to iTunes and some new headphones, which look kind of interesting. So that's we're seeing a gap up in Apple today. How about that? Just so interesting to see how stocks and markets behave contrary to what so many of the predictions are. That's why I kind of just prefer to watch what the market is saying, watch the technical action, not to base my decisions on any of these predictions. Because they're all using fundamental analysis as their basis for these predictions. And they're just as often wrong as they are right. So that's an interesting thing. I know a lot of people probably sold Apple over here in the past couple of sessions as it was moving lower, and if they were not able to get back in or didn't trust the move up, they were kind of stuck there. So wanted to take a look also at just a few of the movers that we have today. Let me put up a ticker here for JAH. Now, this is Jarden, and this is a mid-cap. And, of course, if you follow this company at all, you know that what they are involved with is playing cards, jars for home canning and storage, plastic forks, Coleman camping gear. Okay, that's something. That's a pretty well-known brand name, but I don't think it's particularly considered high-end. Like if you go in somewhere like an REI, you're not going to see a whole lot of Coleman stuff. You're going to see more higher-end stuff. But what's interesting to me about a company like Jarden, you do see that it's rallying to new highs today, a little bit off that session high, but nonetheless showing gains on the session. Who knew that this kind of motley conglomeration of stuff, plastic type of goods, would make for a successful stock? It's kind of take that. Groupon and Zynga. Let's just for fun, let's just compare where Jarden is at today versus, oh yeah, there's Groupon. Okay. And how's Zynga? Let's just have some fun. Look at Zynga today. Yeah. Okay. So apparently plastic forks and jars and playing cards are a little better than some of this iffy social media stuff. Yeah, once again, okay, we come back to the value of a lot of these predictions and the hype and the excitement and the exuberance that you see with some of these. And let's come back to Jarden. Yeah, which would you rather be in, Jarden or Zynga? Now, Jarden, I noticed they are issuing some convertible notes. Now, that often tends to send a price lower on concerns about future dilution as some of the note buyers convert to common shares. However, what Jarden is also doing is it's buying back $250 million of its stock. Now, that part of the news kind of got buried for some reason under that news about the convertible notes. But there you do. You see the stock trading higher. So some effect of that. I want to take a look at some more. As I mentioned, Jarden is a mid-cap, and I do look at some of those on the show. We don't focus on the mid-caps in our newsletter, the low-price leaders, because we are taking a look at not only stocks that are priced between $5 and $12 a share, although, I guess in theory, doesn't really happen that much. I guess in theory you could have a mid-cap in that range, though I don't think we've had any of those in our newsletter. But we also, in addition to the stocks priced between $5 and $12, we also have the small caps, those with a market cap of between about 250, 300 million, usually 300 million, which is the technical strictest definition, between 300 million and 2 billion in market cap. So we're looking at those in the Low Price Leaders newsletter as well. I'll take this little digression to remind you, check out the homepage of tfnn.com. You could take a free trial. You want to get in on that before our rates do go up, but you can take a free trial of the newsletter. We have a few positions on right now, and done pretty well on a couple of these. A lot of these are not necessarily the big household names that you hear about because snarkiness here, snarkiness warning, because they're not social media companies. or they're not Apple. So you're not necessarily going to be hearing about them, but they've done pretty well. So this is Equinix, EQIX, and this is a tech. And this is one that is not necessarily on our list here, on our watch list that we've been looking at. It really only very recently kind of popped back up onto my radar. One thing is, you can see the gap up here, the rallies to new highs. You do notice that that's been happening. But one thing I don't particularly like about this is on the fundamental side, there has been a pretty dramatic slowdown in the revenue growth rate. Okay? So that's something that is of a little bit of concern to me. Also, earnings growth, let me see, it was at the double-digit rate in the most recent quarter, which just reported. And that was, let's see, 14, well, no, the June quarter was 14%. What we're seeing here is analysts expect earnings of $2.68 per share in 2012. That would be up 56%. Another 44% growth in 2013 to $3.85 a share. And that is something that I often look at the earnings forecast not to make one of my decisions based on that. I need to make that clear, just because it does give you an indication of the level of confidence that the institutions have in a stock at any given time. Now, Equinix, let me tell you what they do. They provide some of these, what is in fancy language they call co-location services. Basically, they manage these servers. They're data management companies for businesses. So they provide quite a bit of those services for their business clients. Market cap of about 9, let's see here what we've got here on this one. Actually, this one is a mid-cap. Market cap of nearly $10 billion. So it's a pretty big company, but it is, the liquidity is only about 846,000 shares a day that this one is moving on average. So little bit on the light side for a stock with that kind of market cap. But nonetheless, this is one that you see. It's had, let me put this up here for you on a weekly chart. I'm about to go to break here pretty soon, but I want to just wrap up with this. You see a nice weekly rally here. And if I go back to the daily, you can see where it's held up nicely above key moving averages. Got support just above that 50-day line and then gapped higher today. So give a call. We are at 877-927-6648. And coming up in the next segment, we can talk about any stocks or charts you want to look at. And then we've got a terrific guest coming up in the second half of the show. Small Cap Fund Manager Bob Auer will be joining us. So you definitely want to stick around, hear what he has to say. I'm Kate Stalter. We'll be right back with the next segment of today's Small Cap Roundup.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
All right, welcome back. Well, we are just a few minutes closer now to the Fed's announcement, and we're also a few minutes closer to the European close and a few minutes closer to our guest, Bob Auer. Can't wait to talk to him and hear some of his small cap ideas today and his take on the market. Wanted to just remind you, take a look at the homepage, TFNN.com. You will see there are a number of promotions up there, but one that I want to draw your attention to, it's got the headline, get a 20 to 30% bonus match plus a free trading workshop. And if you click on the little link to that, there's also a picture there. What that is a promotion for what we call around here Tiger dollars. So there is a special on those, and that gives you, as I just said, you get a bonus on all your purchases here on TFNN.com. You can use them towards any purchases on the site. And any subscriptions, software, books. So you also will get access to a 5-hour live trading workshop with Tom O'Brien. So that's a very, very valuable bonus that you absolutely want to act quickly and take part in that. This special goes through September 16th, so you can check that out on the homepage of TFNN.com. Okay, let's see here. So I was looking at, I just wanted to draw your attention to some of these names that are moving today. Here's an interesting one, and this is kind of a funny one. It's I was at a seminar recently, and the seminar leader was kind of mockingly, I thought it was funny, he was kind of using this particular stock as the example of one of these volatile, speculative Chinese recent IPOs. And as I often talk about on the show, so many of these things have been delisted. They were some of the big leaders coming out of that market downturn in 2009. And they have, many of them you don't hear that much about anymore. Now this one, Kihu, what this is, they make antivirus software. And yeah, is there a little bit of an irony that a lot of these scams seem to originate in China? That's one of the places they come from, perhaps. But this is a Chinese maker of antivirus software and other products for web developers. Went public in April of 2011. I'm going to put this up here on a weekly chart, and you can pretty much see. So there's April 2011, way back here, okay? And then you can kind of see why it fell off my radar. For those of you who do follow my investing methodology, you know that I prefer to buy into some signs of strength rather than trying to buy something that is falling, and attempting to catch the bottom on this. I like to see moving average indications that some of these stocks are finding some strength. So, as I said, you can see why it fell off my radar. I mean, hello, this is a weekly chart. Look at this. I'm not even counting. Look how many weeks in a row down that is. That's just crazy. When do you see that? Never. But eventually, the thing did find a bottom. They always do. It's a bit in rally mode right now. We are seeing an increase in this one today. Let me go over here and we'll take a look. I'll give you a percentage gain on Kihu. Oh, actually down a little bit since that chart was updated. Trading right now at 24.01, which is, a pretty sizable dip there from 24.73 just a few minutes ago. So that's down about 1% in just the last few minutes. About 1%. So this is kind of illustrates some of the risks inherent in some of these stocks. I don't really know what else to say about this one. I don't particularly like it. We're seeing a deceleration in the earnings growth, a deceleration in the revenue growth, although the forecasts still look pretty good. 39% earnings growth expected this year, 54% expected in 2013 to $1.09 per share. So, when you look at it that way, that doesn't sound so bad. I just don't like the chart character, the trading patterns of this thing. It's what the indexes would consider a small cap. It comes in with a market cap of about $2.9 billion, and as you may be aware, that's what the S&P 600 and the Russell 2000 consider a small cap, rather. That would be a small cap. I consider it really more in the mid-cap range. Liquidity of about 2 million shares a day. Not really liking it. Okay, stick around. We will have our guest, fund manager Bob Auer, coming up right after these messages.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
All righty, welcome back. This is the Small Cap Roundup. And as I mentioned today, we have a guest that I'm pleased to welcome back to the show. As many of you know who listen, I do like to bring on the fund managers to get a lot of their perspective, because it is their buying and selling that does move a lot of these stocks, in particular with some of these managed funds with the small caps. And our guest today is Bob Auer, small cap manager from the Auer Funds. And Bob, I'm glad to have you back here. I'm sure, we're all sitting here looking at what's happening with the markets moving up in anticipation of some further quantitative easing in about an hour or so. And give us your take of what you're seeing in the markets and how the QE affects the small caps. Because a lot of the analysts I talk to say you tend to see the effect more in the larger stocks that maybe tend to be indexed more often. What's your take on that?
I totally agree with that, Kate. The small cap stocks, and even digging deeper to the micro cap stocks, are just really on the ropes. They don't move with the institutional investors. A lot of mutual funds that are much larger than our fund, they can't even touch the space. They can't get enough traction in those names, so they just aren't even in them. They want to try to make a couple points in an Apple or Amazon or Google where they can get in and get out. And the small cap space, I feel, is predominantly dominated not by the mutual funds or the institutions, but by the individual investor, the retail investor, who it can be as simple as their neighbor works at the company, and it just kind of spreads throughout the neighborhood at the barbecue, the neighborhood cookout.
Mm-hmm. Right.
That company's hiring, doing well, selling more widgets, and it gets its own little following, and that can move these stocks. And obviously, if a fund does come in, that moves them as well. But these small stocks really need the individual investor to come back into the market, buying, 100 shares, 500 shares, 1,000 share lots, and that starts to add up, and that's the supply and demand equation on these small cap stocks.
Mm-hmm. That's very interesting. And, of course, as you're well aware, a lot of these, they tend to have the high betas, and they can even, it's almost sort of a conundrum because they need the smaller investors, but that can also make them riskier investments, it seems.
Yeah, they're riskier, but that works also to the upside. And I'll give you an example of a stock we own in our fund that reported last night. So this is very timely because it's actually off the fiscal cycle of a December year-end. They're on a January year-end, so they just reported their July 30th quarter, where most companies would be on the June. So it's slow on earnings season now, but these July reports are coming in, and they reported last night an unbelievable quarter. The ticker symbol is AGX, Argon. And they're in the business of converting coal-fired generating plants for huge utilities over to gas-fired. And this is why they're doing so well and why we own them in the fund. And the stock is up nicely today. It's up 6%. But here's the point of it. This stock has a $220 million market cap starting this morning. It was at $220 million. The stock has traded today only 13,000 shares, and it's trading for $17.06 per share. So if I multiply that out, the total purchase value, and we don't know that it was all, obviously buyers and sellers were matched together, but let's assume it was all orders to buy, initiating, where the buyer was, picking up the phone to the broker, hey, buy this stock, buy this stock. It only traded $221,000 of stock. That's all it's traded today. Mm-hmm. Now, the stock, though, is up 6% on a $220 million market cap. So $220 million times 6% is $13 million. So think about this concept that only a little over $200,000 of purchasing power or demand raised the market value of all the shareholders by $13 million. Mm-hmm. And so it works like that. I call it the multiplier effect, but it also works in reverse, and it's been, for the last 3 or 4 years, it's been more of the reverse. And so it takes very little selling to cause a huge effect. Likewise, it could cause very little buying, could also have the positive effect on some of these stocks when the individuals come back into the market.
Mm-hmm. Yeah, we're not talking about Apple here with something like this.
Exactly. Even Apple does have a multiplicative effect. You may have, in any one day, you might have, $1 billion of trading, and it can move the stock $4 or $5 billion. But on these small caps, as we just showed, you can have a 40 to 50-fold effect, where 40 times the value of the stock purchased raises the whole market cap. But on large caps, it's usually 2 to 1, and sometimes it can be 4 or 5 to 1.
Now, this is really interesting. I want to follow up on something because I'm looking at the 50-day average volume on this stock, and it looks like it's about 23,000 shares, and that's prior to today. So 23,000 before today would have been the average daily volume. Now, is that unusual, Bob, for a fund manager like yourself to be in a stock this small and this thinly traded?
Yes. Many of the little microcaps, we may be one of the top 1, 2, or 3 funds. On this stock here, full disclosure, we own 24,000 shares, so we own about 1 day of the trading volume.
Right.
And we're reviewing the quarter. We might add to it. I don't know. So, I mean, but it's what's holding us back is we don't like to be where it takes multi-days, and even if you only own 1 day of the volume, that doesn't mean you can get out in 1 day. You got to sometimes string that out. So once we get up to 1 or 2 days trading volume, that's about as much as we will put in. But we really like the story of the stock, and they said in the report, which was released after the close yesterday, so if you go to any financial site where you can get press releases in the company's financial news or even the company's site themselves, they say in the report, we have unrestricted cash of $186 million and we are net debt-free. And the company, starting today, only had a $220 million market cap. And before today, only was up 5% year-to-date, with the S&P up about 12 to 13%. And here's a company that just reported over $80 million of revenues for the quarter versus only $25 million for the same quarter a year ago, and is trading at about 10 times earnings with about a 300% growth rate on profits and sales, trading for a little bit more than their cash in the bank. In a business that how many power plants are rushing to convert, and they also said not only did they do over $80 million of revenue just for the quarter, they have now built their backlog up to $280 million of projects, and they just signed another huge utility in Texas that wants them to start converting over their plant. And so it's a tiny company, but this company's had no interest in it, as you can see by the only 23,000 shares that have average traded. And here, even after the earnings announcement, it's only traded 13,000. Now, by the end of the day, it might be up to about the average trading. It's just like no interest in it. You would think the day after the earnings there'd at least be a heavier trading, especially on record with record backlog sitting on all this cash. But I don't know why the story's not. And I'm not trying to pump the stock up because I'd like to maybe buy some later if it's going to meet our criteria. I'm going to have to review it, and so I'm not trying to drive it up. It's one of our smaller positions, but I'm trying to bring it to people's attention that it's a poster child for the small cap market.
Now, as you're speaking, one thing that also occurs to me, maybe about the lack of interest in some of these names, is it the case that the investment banks, once the stock goes public, there's really nothing else they can do? They lose interest. There's not a lot of analyst coverage. Is that a factor as well?
Yes, and on this company, there is only one analyst, and so there isn't anybody out really touting it, and I know that the analyst isn't actively following it because the analyst doesn't even make quarterly projections. The analyst, so on some of these microcap, the analyst, it's just kind of like it's kind of a token report. Maybe it is somebody who's done some investment banking for them or trying to get back in the door. And so they are, they just feel obligated to keep some coverage on the company, but they don't even really drill down even to the quarter. And so this has no quarterly estimates. It just has an estimate for 2012 and 2013 on the annual earnings per share. That's all that's available. There's really not a lot that you can find other than from the company themselves that's just telling you, here's what's happening, here's what we're doing, here's the contracts, here's our report and why we're doing so good. But nobody is out there with a bullhorn touting it. I have another stock that's very interesting, too, because of the industry, Hawaiian Holdings, which is the holding company for Hawaiian Airlines. They recently reported, and they said something interesting in there as well. They said two things. This is only a $300 million market cap, so it's dwarfed by the Deltas and the Southwest Airlines, and they just fly this niche of, San Francisco to Hawaii and New York to Hawaii, Chicago to Hawaii. They've just cherry-picked, 20 really good cities, and they just fly their plane over to Hawaii, and that's all they do.
Yeah, I've flown on them out of LAX, yeah. Uh-huh.
Yeah, and most on-time airline in the United States 8 years running. But they said this little 300 million market cap, they have 380 million. They just said this in their last quarter. We are sitting on 380 million of unrestricted cash. Unrestricted. Now, they do have debt because they're an airline on their planes. Mm-hmm. But isn't this interesting that they literally, if they chose to make an offer like 20% greater than the current stock price, they could just take themselves private with their own cash that's unrestricted to use what now that would stop them from buying a couple new Boeings and Airbuses, which is probably on their table, but that you can find, and it's trading at a 5 PE on forward and current. It's just amazing. So these bargains are available.
Yeah, and that's kind of what I was going to ask you about is what is your methodology for identifying some of these names, Bob?
What we simply do is we look at every company after they report the earnings, and we're looking for three very important things, and we don't bend on this. They have to have just reported a 25% up earnings per share for the quarter versus last year's quarter. The sales have to be up just 20% for the quarter versus last year's quarter, a little lower, 25 on profit, 20 on sales, and they have to be either trading at below a 12 PE or trading below a forward 12 PE. And then we buy them, and as long as they keep doing that every quarter, we hold them. If they stop doing it, we sell them, or if they double, we sell them. And we've done this since the fund is only 4 years old, and the process has not worked in our fund since we've been a public fund, because you can see these stocks, it's not what the market's focused on. But it has worked very good in our own private account since 1987, and that was the precursor to the fund. And we don't know any other way to invest but buy fast-growing companies. We buy them big or small. We're not. We don't exclude large companies. We own Caterpillar Tractor, but we only have about 5 stocks that are large cap in the fund, and it's very hard to find big companies that just did a 25% quarter because of the economy and 20% on sales and still have under a 12 PE. There are big companies that have above the 25% growth, but they have high PEs. So it's a very tough metric to find, but that's what we stick with.
Yeah, I was curious about that. We've got just about a minute left. We're about to wrap up this segment, but it does sound like you are kind of mixing some maybe traditional elements that many consider growth and some that many consider value.
Yes, we do. We're very deep value with very aggressive growth mixed together. And at any one time, it's hard to find. There's almost 8,000 companies that trade in the U.S. We only find, and we look at every one, it's usually between 100 and 125, so almost over 7,900 of the 8,000 don't make this criteria. It's a very selective criteria.
And do you use any technicals at all, or is it purely fundamental?
Purely fundamentals, and we pay no attention to what's going on in the economy or the GDP or what the Fed chairman says. We just keep 100% invested if we can find these companies, and that does kind of whipsaw us around. So, but in the long term, it has served us very well.
Well, Bob, thank you so much. It's been just tremendous having you joining us again here on the show. You're welcome to come back anytime. But thanks for some terrific ideas that our listeners may not be aware of.
Thank you for hosting me, Kate. I enjoyed it.
All right. Talk to you soon.
Goodbye.
All right, everybody. Stick around. We've got one last segment. Hopefully we'll have some callers who called in before the break who will call back, and we can look at some of their charts that they want to take a look at. 877-927-6648. Be right back with the last segment of today's Small Cap Roundup.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question, are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this. Today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All righty, welcome back. Last segment of today's show. I want to thank Bob Auer, always giving us some great perspective on some of these names. And once again, as I always say when we have the fund managers on the show, not necessarily are they going to be talking about stocks that would pop up on my screens and that we as individuals would want to get into immediately, but some great food for thought and some great insight into the professional investor's thought process. So I understand we have Art on the phone, and Art, thank you so much for holding on and calling back. I appreciate that. Now we're looking at Medley Capital, MCC. I like this chart very much. Tell me what you were looking at here.
Well, it seems to have a number of things to recommend it. IBD seems to like the stock. It's got a 10.5% yield right now, and of course you see it's riding the 10-day moving average line. Yep. Like a pony for the last 3 months. So just wondering if you knew anything about the stock or had seen it come up on your screens before?
Yeah, I had recently, only very recently did it start to show up when it kind of crossed that 300 million market cap threshold. And I suspect IBD was probably not looking at it long before that either. Let's see here. This is a business development company. They provide debt and equity financing for small and mid-sized companies. So they're kind of, you could say a non-bank kind of financer. Now, what I like right here, Art, this stock is getting support right around at its 5-day exponential line, and it rallied to an all-time high on Tuesday and is kind of pulling back very nicely, getting some short-term support. And I'm also liking the fundamentals on this. I mean, I'm seeing another reason why this only recently started popping up on some growth screens is because the rate of revenue growth only really started to register in the past couple of quarters, as did the rate of earnings growth. And this is pretty new. This went public back in, January of 2011 at $12 a share. It's now trading at around $13.62. Let me put this up here on a weekly chart on Tiger TV. So you can see, it had that big downturn. A lot of that was coincident with the broader market. So again, not a real surprise to see what that did. But yeah, this looks pretty good right now. Are you in this one at the moment, or just still watching it?
No, I was watching it and wondering if I should be waiting for it to start to base a little bit, because I know folks like you and Ken Shreve tend to want to see a stock base periodically and not just ride the moving average lines up.
Yeah, I kind of tend to use more of the moving average trading with these smaller names, actually. I do look at the 5-day line, the 15-day line, and this has good support at that 5-day line right now, and this could be something. Let me just see right here where it is relative to that 5-day. It's just a little bit above that. So I kind of like where this is sitting right now, Art. What I would check is just make sure when this thing is going to report earnings, and you don't want to get in on something too soon before it's earned. Let me see if I can pull it up here. So it's due to report earnings right around November 1st. So that gives you a nice window there to capitalize before that next report happens.
Thanks very much, Kate.
All right, Art. Thanks for the call.
Take care. Bye.
All right, everybody. That is pretty much a wrap of the show today. Looks like our time is just about up here. Great question from Art. I know he's called before. He always brings up some terrific stocks, so that was a very nice one to look at. Take a look, in addition to the Tiger Dollars promotion on the homepage of TFNN. We've also still got our recent IPO special report that's up there, and I urge you to take a look at that one as well. Medley Capital is not included in the report, but it's definitely in line with some of these newer IPOs that I do like to take a look at because they often have great potential. All right, everybody, have a great weekend. I'll be back on Tuesday with the next Small Cap Roundup.